Welcome to the most important section of the entire course, which is how to run fibs. I will start off on explaining the way how I run fibs on the smallest time frame, which is the 15-minute. On the next video, I would explain how I run them on the 30-minute, which is slightly different because it is using levels with the higher time frame. With the smaller time frame, which is the 15, is using the bodies. So I have set my fibs to default just so I can show you guys how I customize my settings. It's just easier on the eyes, and I think it's more beneficial to have them this way. So let's start off with setting up the fibs. By default, you will not have the Fibonacci retracements here on Trading View. So you go to the drop down menu, go to Fib retracement. I lay them out first and go to settings. By default, you'll have all this color going on here and the lines are not extended. It's the first thing I actually do. I extend the lines. I change the colors to black and I make the background transparent. That makes a huge difference right away. You'll see right there. It looks very clean. And another thing I do is I remove the higher percentages because these are just for target points and I run my own targets, so I don't want to use those levels. I do not use the 50%, so I changed this to the 62, which is rounding it off from 61.8, and then I use the 75, and this one gets rounded off to 79. The reason why I do it like this is just how my mentor taught me, ICT. This is how he does it. So this is how I've been doing it myself, and I've noticed that it's very, very efficient and spot on. So these are the settings that I use. This one, I leave it as default, the 23.6, 38.2. This fib levels, I do use them, but this will be on the next section, which is running fibs 2.0. For the moment, we're going to focus on this levels because it is just a safer way to trade. Fibs 2.0, this is more for a hyper scalper technique or for a more professional seasoned trader. So at this point, we're already finished customizing these settings, which is setting everything to black, extending the lines, transparent background, switching it to 79, 75, 62. We don't use the 50%, so that is why I replaced it with this level. So you will see a big gap in between these two percentages. And that's about it. So I'll press OK. And there we have it. We have very clean, concise fibs. So I will start off by running fibs on the trades that I've placed this week. I did not trade on Sunday. It was too choppy. I didn't see any direction. And on Monday, I didn't trade either, which was here, the Monday session. This was just too choppy for me. I didn't like it at all. I was looking at it, but I did not take a trade. And also that is part of your plan or your strategy. Not taking a trade is part of a strategy. You're trying to position yourself in the most probable trade, not just taking a trade for the sake of taking a trade. Remember that your capital, it can easily be vanished in the market. So you need to know when to place your trades. So Monday, there was no trades. This was Tuesday right here. And today, Wednesday, right here. So I will go over my trades from yesterday and today. So yesterday, once I woke up around 4 o'clock in the morning, I saw this pullback. Usually, a small secret from the euro dollar is that on a bearish trend, it will have a pullback like this during market open. From 2 to 4 in the morning, anytime from 2 to 4 in the morning, it will have a retracement like this before it continues being bearish. So that is one of the secrets from the euro dollar. But I shorted up here, but it wasn't for the reason that it was just a bearish pullback and continuation. it was because I ran my fibs not from this high, not from the session highs, but right next to the session highs, which was the part that broke structure. Once you see that you have lower highs here, lower lows, lower lows, and then you have this leg here that just broke this entire market structure. And if you look back, there's more higher lows. This automatically it indicated a bearish move. So that's why you start looking for a fib position to the bear side. So that is why I ran my fibs from here, not from the highest point, but from the next highest point, which was the leg that broke structure. If you guys don't know what legs are, remember that um, in babypips.com, there you can learn a whole lot about charts, strategies, fibs, how legs work. I'm just explaining to you a strategy. That is just part of the foundation on learning how to trade. So once this leg here breaks this market structure, I start looking to take a trade to the downside. So I sat back patiently during the morning session. I didn't take any trades, but towards the end of the day, I saw a double bottom right here. So I drew my fibs, and this just pulled back overnight. This is the Asian session. It's from 7 o'clock till midnight around here, and this is around 3 and 4 in the morning. So I sat back, and once I woke up in the morning, I already had my fibs laid out. I already had the highest point with the leg, the broke market structure, lowest point, pull back. The perfect entry is the 70%. And you see how it bounced right at the 70%. So that was a perfect entry short. And you see that you have no drawdown. If you would have entered at the 70%, that would have been a spot on short. I wasn't able to enter at the right at the 70 because at that point I was getting ready and coming to my trading station. So I ended up taking the trade around here. It is valid. The trade is valid if you take it anywhere in this parameter here, which is before the first support area, because this will be your first take profit area. So since you want to take profit here, you don't want to enter the trade here. This will be too late, but you want to enter the trade somewhere around here. You want to enter the trade so you can immediately take some profit right here, and then your next target is the next support area, which is here, and take profit here. So that's why if you notice, it had a bounce back up at this level. This is the first support area because everyone started taking profit, and then it continued going down, and then here again, this is the second support area, and then you have more traders taking profit, and then it continued to flush. So this is the trade that I took on Tuesday morning, and this is the reason why I took it. I ran my fibs from the highest point to the lowest point, starting to draw them from the leg that broke the structure, and you get your 70 bounce to the short side. I ended up taking profit around here, and I was all out around this area. I was satisfied with my profit, and I didn't want to risk this just bouncing on me. So I took profit around here, but I left a lot of money on the table. And it's gonna happen. You will eventually leave money on the table, but you're better off leaving money on the table than taking a loss. So remember to always take profit. Always take profit at 10 pips, take some profit, and let a few positions ride. And in case they don't continue to ride, you will set your stop at break even. I would explain this on a different video, how to move your stops to break even. At this point, we're just gonna speak about the fibs. So I'm gonna remove the fibs and use another example. So this happened, it unfolded around here. I took profit. I called it a day. So then right around 10 o'clock at night, I usually don't trade at night. I just trade in the morning from 4 to 8 in the morning. However, I had some downtime. It was 10 o'clock at night, and I saw this nice pullback. So I ended up taking a short right here. And I will tell you why I took a short there. So I ran my fibs from here to the lowest point, which is right there. And if you notice, that was a 70 entry as well, short right here. It hit the 70 level, it pulled back, it bounced a bit, back to the 70 level, almost touched the 79, which is still a valid entry, and then it flushed. So I ended up taking a short right here. I set a automatic alert, so I woke up around this area and I took profit right around here. That was about $700 on 6 lots. So I would show you why I place my fibs here, because this is where it causes a bit of confusion. You would think that you would like to run fibs from the highest point to the lowest point, but it is not from the highest point. You run your fibs from the leg that broke the market structure. So if you notice, this leg here is the one that broke this low, this low, this low, and all these lows moving back. It broke about 5 lows. So this is the leg that broke the market structure, because it was starting to become a bullish move. See, higher lows, higher lows here, higher lows. This was a equal low. So it was continue to become a bullish trend again. However, this leg wiped that bullish momentum that I was trying to create, and it became a bearish environment again. So that is why I ran my fibs from the top of the leg that broke the structure, not from the wicks, from the actual body, to the bottom of the bodies of the lowest point or part of the session. And then that's where you approach this zone here, and that's where you would take your short position. You would take you had 2 chances to take a short, excuse me. You had a chance to take a short here, and about 3 hours later, another short could have been taken here, or you could have added to your position. And there you got your flush. Um, I didn't just magically exit the trade here and knew it was going to bounce. I did not know that was going to happen. But I did know that, and I do know that most of the time you will see a bounce on, if you're taking a short, you will see bounces on previous support areas. Or if you're going long, you will see bounces on previous resistance areas. So that is the reason why I would immediately, once I take a short here, my first target is going to be at the first support level. So the first support level was right here. So this is going to be your first profit zone, and just make sure that you have more than 10 pips in between so it could be worth your while. If you see a move that is less than 10 pips, don't take it. Even if it looks like a perfect setup, it's just not worth it. It's not worth the risk that you're taking, because your stop loss is going to be at 10 pips. So you don't want your take profit to be any less. That's just, it doesn't make any sense. So you want to have your stop at 10 pips, your first take profit at 10 pips, and letting positions ride to 15, 20, or 30 pips. Or you could just, if you're satisfied with your profit at 10 pips, you can just exit the trade. Most of the time, I catch myself exiting the trade entirely by 15 or 20 pips. I'm completely satisfied, and I'll just call it a day with one trade. So when I took this short here, my take profit was right here. This was my first take profit, and my second take profit was down here. And if you notice, it barely touched my second take profit zone. That is why I didn't take profit down here. I ended up exiting my entire position right around here, just because I didn't know if it was going to bounce back up. So I took my entire position out of the table right around this area. And if you notice, it didn't completely reach this second support area. So that is why you always want to place your, if you're going to place an order, make sure that it's placed a few pips above the support, above the support zone that you're trying to target if you're going short, And if you're going long, you're gonna place, let's say that you go long here, you want to place your order a few pips below the resistance area so you can make sure that you get filled. So that was that trade, the overnight trade that I took. So I'm gonna go ahead and remove the fibs. And once I took profit, I took a nap. I went back to sleep. When I woke up again around 5 in the morning, I saw this pullback here. And if you notice, this leg broke this market structure. So it was no longer bullish. So since it wasn't bullish, you can run your fibs from here to this area. And what do we have here? Another 0.70 bounce. So when I woke up in the morning, I missed this bounce right here. I was looking at it from this level. However, I ended up taking the short right around here, and I took profit at the next support area, which was right here. If you notice, there's a lot of confluence with this fibs. Like there's a known pattern called the H pattern, which you see a flush, you see a retracement and a continuation, which is a H pattern, but this is also the fibs that I trade. Sometimes you can see head and shoulders. This is also a head and shoulder right here. So there's a lot of confluence with different patterns coming together with the fibs, which really helps you gain trust on your trade. Because when it comes to you placing an entry, you need to trust your pattern and your strategy. If there's no trust on your strategy, you would just be very, very anxious as the trade unfolds, and you might exit the trade too early or too late. Wow, look at that spike right there. That's insane. All right, so once I saw this flush here, it broke this structure. I ran the fibs. I took a short right here, and I took profit right at this point. However, one of the reasons why I took profit here is because I'm not biased, as in this is a short position. I'm also thinking to the upside. What can potentially happen against me? So that is why before I took profit here, I immediately ran fibs going up. So this is the leg that broke this market structure. So I ran fibs from here to the top side. And if you notice, look what we have here. A 70 bounce right here. And then there's a long, you see? And it's still flying right now. I was just aiming right now for all the orders that were placed here. You see how I just hit it? It's insane. Like it just like clockwork. It happens consistently. It doesn't happen every single day, but you will see these patterns unfold at least 3 or 4 times a week. So that is why it's good to have two solid strategies under your belt, so you can potentially see a trading opportunity every single day. Even though I do not recommend trading every single day, I never sit on my computer in the morning and anticipate a trade. I never think, oh, I need to make X amount of money or I need to place a trade today. I don't think like that. I enjoy it. I sit here in the morning. I just look at my screen. I listen to music in the morning, or I listen to gamma waves. They're good to focus because it's at 40 hertz and it has a chemical reaction in your brain. I can speak about that later on in the course as well. It's just something that gets me in the zone. And I just sit back and patiently just look for setups. Once you see a setup, it will become very, very obvious that you need to take that trade. It's like it's just going to be popping out of the screen. However, if you're not sure what to do, then that means that there's not a setup there and you shouldn't be trading. So yeah, I will go back to my trades again from last night. I ran my fibs from the top, sorry, from here, from the top part of the leg that broke the structure to the bottom. I took this short right here. I took profit right here. I took a nap. I ran fibs again from here to here because it broke this lows. And then I took this short from here to here. Then I saw running my fibs going up. I knew that there was a possibility that it was going to bounce on the 70 level and move up. However, I did not take this trade. The reason why I did not take this trade is because I already took two trades this morning. So I'm not supposed to be over trading. You take one or two trades and call it a day. I made about $900 today with two very, very simple trades. There's no need to overtrade or overcomplicate things. Just practice the fibs. They will just pop out of your screen every time you look at the screen, and it will just become so easy. It does take practice. It does take studying every single day, but it will happen and it is possible. It's very easy. So if you notice, it's still pushing up ever since it had this 70 bounce. And this is the way how you run fibs on the smaller time frames.